All right. Hi, everyone. We are live. My name is Katie Kuntz, and I'm a social news producer here at CNBC. Today, we're going to be answering all of your questions about the latest stock market moves with CNBC's senior stocks correspondent, Bob Pisani. Nice to see you, Bob.
Hi, Katie. How you doing?
I'm good. So let's get started. How is earnings season going so far?
Good. In fact, better than some people expected. I think the key is the absolute most important thing to realize is demand is really strong. I mean, really strong across all industries. You talk to the toothpaste people, the industrial people, the car people. Demand is off the charts everywhere. That's the most important thing. Of course, we have these issues around COVID. And there's different kinds of issues: supply chain issues, labor issues, commodity price inflation. There's factories that shut down in Vietnam because of COVID that are giving people a hard time. So it's a difficult situation, but it's amazing how well these corporations are trying to navigate around all of these supply chain issues. That's the most important thing. If there's anything to worry about is the earnings numbers. Remember, the stock market powers off of earnings. It's what's the profit levels. Are they going up or are they going down? And generically, they're going up, but they're not going up as fast as they were earlier in the year. This makes a little sense if you think about it. I mean, my heavens, the economy exploded in the first and second quarter. So it would make some sense that the rate of growth of earnings, they're still going up, but they're not going up as fast. Would make some sense. The question is how well the stock market's handling that. And given all of the stuff that's been thrown at it around these supply chain issues, it's pretty good. So two questions are: these supply chain worries that you keep hearing about, are they peaking? Are they essentially going to be done in the next several quarters, fourth and first quarter? Second issue is how long can corporate America keep raising prices? You know, they've had these problems. They're paying higher commodity costs. Most corporations have been able to raise prices. Nobody's fighting them. That's pretty amazing. How long are they going to keep getting away with that before somebody just stops and says, all right, I'm not buying chocolate bars anymore, and we're not going to even buy jet aircraft, for example? Those are the two big issues. My sense is on the supply chain, it depends on what you're talking about. So there's a semiconductor shortage. Apple said, yeah, we've got it, but not for our really important chips, the lower end chips. There's higher commodity costs that I think are going to start mitigating, already have in some industries. There's a shortage of workers in some places. I think the indication is that's still going to be an issue here in the fourth quarter and likely in the first quarter, but they're getting their hands around that. The port congestion is a little bigger problem. There's different opinions that it's going to be still be a problem in the first quarter, but they're hiring more people. They're going more to round the clock shifts. So I think it's going to be all right. Remember, the main thing that powers the stock market is profit margins. That's what matters. What's a profit margin? It's essentially earnings divided by revenues. And what's been happening is profit margins have been at historic highs for the S&P 500. It's about 13% is your profit margin for the overall S&P 500. Historically, it's about 8%. So it's been going up the last few years. And it's been going up because earnings have been growing faster than revenues. Revenues are up, but corporations are getting really good at keeping costs low. As they make more money, as they pull in more sales, or they raise prices, more of that money goes to the bottom line because they've been able to control the prices. They've been able to control costs, excuse me. So you're raising prices, controlling costs, earnings go up. And right now in this quarter, we don't know. It'll probably be somewhere around 12%. Still pretty good, not as high as it was prior quarters. And I guess what I'm trying to say here is these numbers are amazing. And at some point, people are going to push back against the price increases. Demand will maybe get a little lower, so revenues won't be as strong. Something's going to happen eventually. But so far, I mean, corporate America is just rather remarkable how they're handling this whole COVID mess.
So one company that's been getting a lot of buzz this week is Tesla. Tesla just hit a $1 trillion valuation. What does this mean for the company?
A $1 trillion valuation. I don't think it means an awful lot. I'll tell you what does mean an awful lot. This deal they announced, 50,000 cars from Hertz, that's a big deal. I know 50,000 cars doesn't sound like a lot, but think about what's going on here. The argument is Tesla is, it's always been, oh, there's a lot of competition to come. You know, Tesla doesn't have a monopoly on electric vehicles. They're going to dump millions of electric vehicles. And that's true. But so far, think about it, there really is not a Tesla killer that has emerged. I mean, I don't know of one. Maybe somebody thinks there is. Volkswagen's got one. Ford's got one. Chevy's got one. None of them come close to the cachet of a Tesla. None of them. And essentially, Hertz has acknowledged that this week. So you throw in the potential for a bigger deal with Hertz. What do you think? Hertz just announced this because they're nice to Tesla? No, they don't care. People are asking for Teslas at Hertz's counters. They think it's kind of cool. Rent a Tesla. Hertz is complying with that. They're going to be a lot more than 50,000. You throw in the potential for a deal with Uber, and all of a sudden, you massively expand the base of potential ownership because it's cool to own a Tesla. A lot cooler than owning other electric vehicles. So what's electric vehicle sales right now? I don't know, 2% of car sales? Holy mackerel. I mean, that's a lot of room to increase sales rather dramatically from 2%. And Tesla still has the cachet. I keep saying this, and I'm sorry to sound like a broken record, but I don't know of a Tesla killer yet. I know a lot of people who say that they're going to be Tesla killers. I haven't seen it yet, though. And that's why I think it was a big deal this week, because now you throw in the rental car business on top of the potential for Uber. We're heading towards driverless cars here. And you know, Hertz would be happy to do that. Uber would be happy to do that. Tesla is sort of the leader in going in that direction right now.
So another topic that people have been obviously talking a lot about right now is inflation. Are we headed toward hyperinflation?
That word hyperinflation bothers me because I don't know how to define it. I don't know what it is. I lived through the 70s, and that was inflation. My father was a home builder, and I remember in 1979, mortgage rates were almost 20%, believe it or not. And that's a problem. They're under 4% today. And even into the early 1980s and mid 1980s, mortgage rates were 11% or so. Think about that. Everybody out there who's looking for a house and you're outraged at mortgage rates at 4%. In the mid 80s, it was 11. And in 79, it was close to 20%. So it's much cheaper to own a house. It's much cheaper to carry credit card debt. It's much cheaper to have everything. So now we're getting a little higher inflation and people are concerned. My sense is things like commodity costs are likely going to come down. We saw this with lumber already, but that labor costs are not. Labor costs are stickier. I mean, think about this. How many people who were making $10 an hour are now making $15 an hour are going to go back to $10 an hour? I don't think so. You know that's not going to happen. So the question is that a good thing? Everybody has different opinions. I personally think it's a good thing. I personally think that some dishwasher who's making $10 an hour should be making $15 an hour because those people haven't gotten wage hikes in ages, in some cases decades. So if it costs 5 cents more for a Burger King hamburger, I personally would be willing to pay that. Some people will disagree with me on that, but I think it's a good thing what's happened with wages recently, particularly at the lower end. I don't think that these price hikes are going to keep going. There's going to be a point of resistance, you see. This is what I said earlier. At some point, everyone's going to say, sorry, I'm not paying $1.25 for a Hershey and bar or a car. I mean, it doesn't matter, whatever you're talking about. Eventually, there will be a pushback, and there will be essentially a stop in wage hikes. Commodity prices will not keep going up forever. They'll stop, and in some cases, they'll reverse as supply comes back online. This is true in semiconductors. It's the law of supply and demand. So I believe that supply chains are pretty efficient these days. They're disrupted now because of COVID. Science fiction, think about this black swan event. If I would have told you 2 years ago we're going to have a global epidemic that's going to shut down the world, you would have laughed at me. This is like some science fiction story. Nobody would have believed it, and it happened. And look at how they're managing, how well, considering how terrible the whole news was how well everybody's managing around it. So I'm one of those optimists that tend to think that once global supply chains come back online, we'll go back to a much more efficient market. One thing I do think will happen, which is good, is there's a much greater awareness now about some industries do have national security implications, specifically healthcare and semiconductors. We need to have a supply chain that is completely reliable, even in the case of an epidemic. And I think there is an argument that can be made for in certain industries, including healthcare and semiconductors, there's an argument for bringing the supply chain closer to home. And that's a very reasonable argument for people to have. But am I worried that suddenly it's going to be 1974 again and we're going to have 20% mortgage rates? No, not about that.
All right, so switching topics here, our next question is, what do people need to know about investing in a Bitcoin futures ETF?
Well, the most important thing you need to know is you're not buying Bitcoin. You don't own physical Bitcoin, and that's why it was approved. I've said this before, I think very highly of what Gary Gensler is trying to do with the SEC, but he has a major problem with cryptocurrency. People want to be able to own Bitcoin easily. The way to own Bitcoin easily is through an ETF, where somebody actually has the custodial problem. This is the way gold works. The GLD, for example, somebody owns gold in a vault in London, and they charge you a little bit to manage it. You don't sit there in your closet with gold. You can if you want, but it's kind of an awkward way to own gold. You can try to own Bitcoin if you want through an exchange, but we've seen what happens here. These exchanges get broken into. People forget their passwords. It's crazy. So if you have a Bitcoin ETF, somebody is under a legal obligation to have a vault and manage it for you. Solves a lot of problems. The problem is that the SEC does not have regulatory control over a large part of the whole crypto universe. Gensler has already said, I am not going forward unless I get clear regulatory control, or we have a division of labor where we understand, either us or the CFTC, somebody is got to have a clear understanding of the regulatory universe, which makes absolute sense because the SEC's role is to protect the investor. How are they going to protect the investor when they don't even have regulatory control over large parts of the crypto universe? Forget about what the crypto anarchists are saying. This is not going to happen. The SEC is not going to approve a Bitcoin ETF unless there's a clear understanding of who regulates what. Period. And that's what Gensler has said. So now along comes these Bitcoin futures. What do? Well, in Bitcoin futures, you just own futures contracts that expire that are tied loosely to Bitcoin itself. And so you have a contract that expires every month, and then you roll over into a new contract. You're not actually owning any Bitcoin. This solves a major problem for the SEC. They don't have to worry about control of the regulatory space. Futures are already regulated. You see, you don't own any Bitcoin here. So you don't have, it solves the SEC's short-term problem. Let some investor interest go into crypto, but you're not making any statement about physical ownership of Bitcoin and all of the regulatory problems because you have to get it. Now, what do you need? I don't know. Gensler seems to think you might need a national bill to regulate the whole crypto space in general. Maybe. In some cases, you might be able to have little power grabs where the SEC says, we have control over this part or this part. They've been doing that in a small way. So you see what I'm saying here. This is a problem. The Congress needs to have a national act that indicates who controls what in these crypto spaces. But they can't even agree on the debt ceiling. How are they going to do that? How are they going to do a national bill? I think that's a little bit unrealistic. And that's why I think Gensler is holding back here. So me personally, I'm a big believer in blockchain. I think it's tremendous technology. I'm a big believer in decentralized finance. I vote yes on all of that. Let's move forward. On crypto, I'm kind of neutral. Crypto is Bitcoin. Bitcoin is a cryptocurrency running off the blockchain. There are people who believe that, somehow the full faith and credit of the United States government isn't worth much anymore, and I'd rather invest in Bitcoin. Personally, I'd go with the full faith and credit of the United States government over the full faith and credit of Bitcoin, whatever that is. So I'm neutral on Bitcoin, but I think if people want to invest, they should be allowed to, but within a regulatory framework. So yes to DeFi, yes to blockchain, and people should have a regulatory regime that we all understand for people who want to invest in cryptocurrencies.
Thanks, Bob. That's definitely helpful context there. So we talked about earnings a little bit already, but let's dive deeper into one company in particular. What happened with Robinhood's earnings this week?
Well, here's a good example about crypto. What happens is with Robinhood is essentially their revenues are dependent upon the enthusiasm of their investors. You might say, well, that's obvious. Well, no, actually, this isn't Charles Schwab. This is mostly young investors, 22 million or so people. They don't have an awful lot of money in their accounts, certainly not anything compared to Schwab or Vanguard, for example, but they're very enthusiastic and they like to trade a lot. And it turns out they like to trade a lot of crypto. In fact, the last quarter, second quarter, they traded a ridiculous amount of Dogecoin, another coin that's a little bit difficult to get your hands around. But Robinhood really made a lot of money in trading around Dogecoin. This quarter, they didn't. The third quarter, they didn't. So because the enthusiasm wanes. So it's very difficult to have a business model when all of a sudden, oh, Dogecoin is big one month and then one quarter, then it's not big the next quarter and it kind of goes away. You want growth that's understandable. You want growth that's not quixotic, that goes all over the place. So the revenues were lighter than expected because crypto trading was lighter. As I mentioned, a huge amount of trading around Dogecoin in the second quarter went down dramatically in the third quarter. So essentially, Robinhood is levered to crypto trends. It's also very levered to options trading, which is a little more steady as a revenue stream. But, listen, it's easy to buy call options in an up market. If you have a market that is less than that, you might see that revenue drop dramatically because the people are not going to trade as much because they can't figure out a clear trend. Everybody's a genius in an up market. It's an old saw and it's boring, but it's true. So they're levered to a lot of different things. I think that 22 million accounts is a really good number of people. I mean, Schwab probably has 35 million. That's pretty good, 22 million. Robinhood should be very proud of themselves. So they've got things to try to keep people still interested. There's a lot of interest in this crypto wallet that we're talking about. They're doing, looking to securities lending and things like that. So they're trying to grow, and I think it's a great idea. What I want is I want those 22 million young people to stay involved and to stay interested in the market. When the market downturn comes, and there will be one eventually, I don't want them to walk away and say, we didn't. It's all a lot of nonsense, the stock market. You want to be long-term investors. And yes, go ahead and trade some. But as Jack Bogle said, 90% of your money should probably be in very stable, boring stuff. And if you want to mess around with the other 10%, go ahead. But that's how you're a long-term investor. And that's what I want to see. I want to see those wonderful young people who've been so interested in the markets stay around. I want to see them into middle age and new people. We need new people investing in the markets. And that's why I'm a big supporter in general.
Thanks, Bob. So it's hard to believe, but today is the last trading day in October. Monday is November 1st. So where do markets stand heading into the end of the year?
Well, as usual, everybody's wrong. October is usually a ratty, crummy month, full of strange volatility. There was volatility, but it's up. We're going into, if you believe these calendrical investing cycles, this is one of the big old saws on Wall Street. What's the best time of the year to invest? And if you believe in that, we are now going into the best time of the year to invest. November, December, and January is the best 3 months to invest in the year. Historically, those 3 months outperform all the other months. I mean, there are other months that do very well, but I'll give you an example. November, December, since the World War II, is up about 4% on average every year. Interestingly, the 3 months we're just coming out of, August, September, October, is historically the worst 3 months. It's usually down fractionally historically. Of course, during COVID, everything's wrong. August to September, October actually has been very good this year. So that old saw, August, October is bad, actually doesn't work because October's been amazing. We're actually up, 4% or something from August to October. So take it all with a grain of salt. But Wall Street loves it when you get into November because they look at the historical record and they say, yeah. Now remember, there's been years, 2018 or so, it was pretty crummy towards the close. And I have no idea how things are going to go towards the close. I am optimistic long-term that we're going to work out these supply chain problems. I am optimistic that demand is going to stay very high for a lot of products. I am also optimistic you're also going to get some pushback on these price increases that are going on. I don't think you're going to see corporations trying to push prices up 3, 4, 5, 6% in the second quarter of next year. I think people are going to just push back on that. Long term, I'm optimistic on the country and bullish on America. I know that sounds corny, but it's actually very true. And I hope everybody else will be as well. I don't know about valuations. They're high. It's the stock market relative to what the earnings power that corporate America has is expensive. You're paying north of 20 times the earnings estimates for 2022. And remember, their historical range is 15, 16, 17. They tend to be higher, the multiple as it's called, when earnings are growing and the economy is growing. That market is telling us right now that they believe the earnings are still growing and the economy is still growing. That's what the market is telling us right now. But it's expensive. So I can't turn around and say, oh, this is a cheap market. You should invest now on a relative basis. It's not. That's a little bit of a worry. But if you're a longer term investor, and you should be thinking in terms of many years and not in terms of weeks, that is not necessarily a source of worry.
Great. Well, thank you, Bob. Thanks for answering all of our questions for today. And thank you to everyone for tuning in for another Market Matters. Great questions, as usual.
Always great questions. You hit all the right questions. These are the main topics for the whole week we're asking.
Yeah, definitely. So have a nice weekend, Bob, and we'll see you again in a couple of weeks.
Bye, everybody. Thank you.